It's November, and we have a market update for you on what's going on in the Austin real estate market. I'm David Shapiro. This is Lee Abraham. Let's dive right in. So we're looking at the number of active listings. They've been hovering in the 2,500 to 2,600 active homes, and these are single-family homes within the city limits. And just to refresh your memory, you can look on the chart here and see that they were as low as 341. And for months, we were hovering in this 500 or sub 500 homes on the market range. And so now we are at 5x the number of active single-family homes available within the city limits.
As we see, there's different ways to measure the inventory. These are the actual number of listings. And you know what? Inventory's gone down, David.
Yeah?
The actual number of listings at the beginning of the month is less than the actual number of listings at the beginning of October. So the actual inventory has decreased, but there's more to the story.
So then let's look at the housing inventory, which is different than just the number of active listings.
Right.
And so we're taking a measure of how many listings are selling per month. And in the last month, it's only been 515. So we're seeing a downward trend here, where the 12-month average is 846, the 3-month average is 678, and in the last month, it's even less. And so when you divide the number of sales per month into the number of active listings, we get almost 5.
Yeah, it's right at 5. Let's call it 5.
Okay, we'll round.
We've got a 5-month listing inventory, and we'll peel away some of the layers, dig into some of the numbers, and I will warn our viewers that there are some shocking numbers. So now we're looking at the 30-day monthly housing inventory at the beginning of the month over the past year. We can see that there was a pretty steep increase from last month to this month, almost a full month growth, and that's very significant compared to the increases that we've seen other than the July-August jump, which was still a larger bump than what we've just seen.
So here we have the number of sales. So down 43% from last year. So that is a huge drop, down 30% from last month. So just 500 sales. And one caveat is we're always the first to report these numbers. And so there's going to be some sales that get entered today, tomorrow, the next couple of days. And so this number might go up a little bit. So it's not going to be as drastic, but it's still going to be certainly well below last year and last month.
Yeah, and I believe that it will be over 600 by the time all the numbers get entered into the system.
So here we have the last 5.5 years of data. Generally January, because you have the holidays, so November, December is when things are going into contract. Usually takes 30 to 60 days to close. So because people aren't transacting that much over the holidays, January has the least number of sales. And you can see it's pretty much been the case every year for the last 6 years. And here we're seeing those types of numbers in October, which is rare.
Yeah, and I think we're setting ourselves up for a very interesting holiday season into the first quarter of next year. And that's why I like peeling away all of the different elements that contribute to the equation of what's going on in the market, because it's not what you might think. The point that I'll make here as we're looking at the number of sales, the number of listings, is we don't have a rapidly rising inventory based on the actual number of listings. We do not have a glut. That's the word that you keep your ears open for when you really are looking at a downwardly trending market, is that there's a glut of listings. We're a far cry from that. What's happening is that the sales are dramatically decreasing. And let's take a look at some of the numbers that are coming out of all that activity. This is the big shocker, David.
Wow. The average sale price up 17% from this time last year.
Is it possible? So, as we get into a volatile market, some of the statistics that we take for granted as being the truth, we start to parse them out a little bit. Average sale price is one way to measure price appreciation. It's not necessarily the best way. Best way is what we call paired sales analysis, the type of thing appraisers do. What did a property sell for 5 years ago? What did it sell for today? The difference is basically real price appreciation. These are average prices. When we're dealing with 500 sales, 600 sales a month, that average can skew based on what segment is performing the best, all those type of things. Also, you just take a look at month-to-month fluctuations in numbers. 718,000, this month last year, but the October number was measurably higher at 735. A lot of different moving pieces here, but hey, headline, 17% year-over-year growth, and even 7.3% as compared to last month.
So one thing that could be happening here is that the low end of the market is not transacting that much. But the high end of the market, where people are less affected by this, if you have a $5 million, $10 million budget and you were going to pay cash, then you're not really impacted and you might still be moving forward. So those people are still transacting, and those numbers are in here, but the $300,000, $400,000, $500,000 homes, those people are out of the market now, and so those deals aren't happening. And so that could be one reason why the average is actually up. We could look at median, but we're not doing that. And why is that, Lee?
Traditionally, for me anyway, the median is a good metric when looking at a trend line over a long period of time. But at any given point in time, it's almost a meaningless indicator. I like the average price because you can multiply it by the number of units and start extrapolating what's happening in the market. Median is kind of its own little island statistic that is relevant, but for what we're doing here, I think it can be misleading in terms of what's actually happening in the market.
The number of days it took to sell a home has doubled in the last year.
Yes.
Still below 2019, 2018, 2017, all very strong sellers markets.
Yeah.
So, we're talking about recency bias, sellers thinking like, oh my gosh, my home didn't sell over the weekend, or it's been a week and nothing's happened. That's just getting back to the norm. So we'll see. This will probably still keep going up, I would imagine, and we'll see if it gets well beyond what historic numbers have looked like.
So if I scan the chart ever so quickly, the highest days on market that I'm seeing is in the month of February, back in 2017, 2018, 60 days. Now, I know over the course of my career, I've seen much, much higher numbers at various points. 36 days, 38 days. Stability in the face of volatility.
Number of new listings down. Sellers realize this is not the market they want to be selling their home in, so they just say, all right, well, I'm just going to wait.
Yes.
And so there's less people listing their homes. So here's a new stat we started tracking. It's the number of expired listings. So meaning the listing agent and the seller had an agreement, and that agreement expired, and so it's no longer being listed on the multiple listing service, the MLS, so it comes down. It's an expired listing, and that number we were thinking might go up, but it's not.
And I think your point about the discretionary seller choosing not to sell now is the key. What happens in the volatility and that downward trend is that the people who really need to sell, they need to sell. And we've seen just from some recent transactions we've been negotiating on the part of the buyer that, I hate to use the word, but we're representing the buyer in these cases, exploit the motivation of the seller, and that drags down the rest of the activity. Usually the average sale price, but that hasn't shown up yet in the numbers we've been looking at.
And I ran into one of the top luxury builders last night out for Halloween, roaming the neighborhood, and we started chatting about real estate, of course. And, some of the pressure on builders right now, even if they themselves are like, I just want to wait it out. I don't want to lower my price. But they might have investors. They might have banks. There's other people breathing down their neck going, you got to sell this thing. And they might have cash flow issues. Like they got to sell it because they can't just be sitting on that payment every month. So there's some pressure here from forced sellers. Those aren't the homeowners. Those are the ones that can wait it out. They'll just live in their home a little bit longer. But the builders and then other people that have specific motivations, and that's where there's deals to be had for buyers. But market-wide, maybe not necessarily.
Correct.
But in individual scenarios, there's opportunities out there for buyers. I've been saying the best buying opportunity in Austin that we're going to see in a long time is somewhere in the next 14 months, between now and the end of next year. I can't tell you which month it's going to be. We're not going to be able to tell you that until hindsight. So it could be this upcoming month. There's definitely some seasonality plus interest rates rising happening right now here in the next 2 months. And that could reverse next year. And next thing we know, all of a sudden this market's back and it's on fire, but it could also be sometime next year. So if you're a buyer out there, wherever the timing's right for you in the next 14 months, but you might think it's going to be the end of next year, and it may not be. It might have been the end of this year.
Right.
So it's really hard to know.
Yeah, it's a micro transaction. It's not a broad market, stock market sort of buying, securities. You're dealing with a unique seller with their circumstances, a unique property, and that's where expertise comes in on helping people make smart choices and avoid costly mistakes in a volatile market.
So here we have the close price to list price ratio. So just an interesting one to track, and you can see it's pretty consistent from last month and down from last year when we were still in multiple offer situations and things selling for way over asking.
Without even crunching numbers, I mean, it's been the same for the past 2 months. What does that mean? It means relative stability on the fundamentals.
And then our inventory barometer.
Love this.
Yeah, this one's great. So you can see, again, if you haven't seen this with us before, 100% line is right here, and this is the key marker. So if the bar is below the line, that means we're selling more homes than are being listed. And if it's above the line, that means there's more new listings than there are sold homes. So inventory is growing. The trend here since early May has been that inventory is growing, and we can see whether some weeks it was growing significantly and other weeks it just barely grew. In the last 6 weeks, it's pretty consistent in this range, and you can see the actual percentages here. The last 6 or so weeks, it's kind of consistently growing. That's how we went from 4 months of inventory to about 5 months of inventory.
If the chart was showing us increasingly high bars from left to right, we would be in a downwardly trending market. It would be an early indicator of that crash. You know, we believe, based on everything that we read and everything we've seen, is that the interest rate hikes are going to continue for the foreseeable quarters anyway. That's not going to help demand. It's going to continue to price out some consumers. That 6-month inventory is really when things can begin to slide. And we've been saying what we've been seeing, which is the facts that there's been year-over-year increase and an occasional month-to-month decrease with the average price. Changing the forecast a little bit, I believe that yes, we are going to see some pockets in the Metro Austin area where we will report a year-over-year decrease on a neighborhood level. I'm not convinced that that's going to happen across the expanse of the market, but it's possible. The good news, the takeaway, as I mentioned before, is it's not a function of an oversupply glut. It's more of a dip in demand, which is much more manageable and much more nimble to turn as the market conditions change. Much harder to impact the supply side in the short run than the demand side. That bodes well for an uptick once this craziness begins to dial down.
We're still undersupplied. The demand out there is greater, even though people have stopped their search in the meantime, but they're waiting for rates to come back down. And this comes back to something I've been talking about, which is first order thinking versus second, third order. And lots of people are like, oh, interest rates are high, I'm going to take a step back and just wait till they come down. Well, what happens when they come down? All of those buyers are going to rush back in, and we're going to be back to where we were a year ago with multiple offers, not enough inventory. We're going to see this come down again because we just can't keep up with it. And so if we get back to 5% interest rates, I think this market's going to be on fire again. Probably 6% is maybe where we have some sort of equilibrium. But if you're hoping for low interest rates and you're a buyer, you've got it wrong. Like, you want high interest rates to buy when everybody else is scared off so you can get a better price. So now is the time to buy for any savvy buyer that wants to get a better price. Yes, in the short term, you're going to be paying a little bit more interest, but as long as you can qualify in a couple of years when rates do come down, if that's what you're anticipating, then you can refi.
It's as our friends in the mortgage industry say, you date the rate, but you marry the real estate. Is it temporary? Yeah, the volatility is a temporary phenomenon. When will rates begin to trend down? Anybody's guess, but if you're in it for the long haul, we have videos that go into great detail on how to look at your buying opportunity in the current market.
Yeah, and it's scary to go ahead and buy into high interest rates, but overcoming that can help you get the best deal.
Yeah, it's an individual decision. We're just trying to give you our guidance based on the expertise that we read and research, as well as our own experience every day dealing with buyers and sellers.
Yeah, and like we had a client recently went under contract on a home that is about $150,000 less than it would have been just several months ago. So big savings for him. He saw that and he felt like long term this house is going to be back worth what it was 6 months ago, probably even more. And so he's taking a little bit of a discount on the home he's selling, but it's not going to be a $150K discount over what it would have been 6 months ago. So it's a net gain for him, and he's excited about that.
Yeah, and same thing is true with investment properties, commercial properties. We're seeing a lot of buying opportunities for the savvy investor.
Yeah, and lots that were 1.3 million in the top neighborhood now selling for 1.1 million. just several months later.
Right.
So being able to get key properties that were multiple offers and you probably couldn't even win 6 months ago.
Right.
Now you're the only one offering and you're getting a discount. So for the right person, if that's you and you're looking to get a deal, reach out to us, go down to the description. You can book a call directly with Lee or I, or just shoot us an email, text us, and we'll hop on a call and talk about your goals and see if this is the right time for you to make a move. Let's dive into what's going on outside of the city limits.
Right.
We've separated these two things out. I haven't seen anybody else do that. They just talk about the metro in general, but I really think that the city performs much differently than the suburbs. It's the whole thesis that people are moving to Austin, Texas. Nobody knows where Buda is or Taylor, Texas. Like, those names are unheard of yet, but they know Austin. And so what's happening in Austin is different than what's happening in all the suburbs. So let's dive in and look at what's happening outside the city limits. Now, a lot more homes. All of these neighboring towns in the metro area, which I believe is roughly 4 counties. Total population of that area is about 2 million versus the city itself is, in the million range. So we've got 7,500 active listings, much different than the 2,500.
Yeah.
So about 3x the number of active listings. You can see here we have 5.2 months of inventory, so just slightly more based on these ratios. About 1,445 sales per month happened in the last month. Much different than the 12-month average, which is over 2,000 sales per month.
Yeah, and what we're seeing really is increased velocity on the slowdown, which is to your point that the premium areas in town are typically going to have greater demand in a volatile market, certainly.
And so here you can see the number of sales per month down 32% year over year, down 34% from last month. So sales dropping off pretty drastically here outside the city limits.
Right.
And then the average sale price still up 6% year over year, down month over month. So this is much different than what we were seeing on the city numbers.
Yes.
Where the city's up significantly, higher price homes. There's very few high price homes like there are within the city limits when you have neighborhoods like Westlake and you have Lake Austin waterfront that are transacting on the MLS. Sometimes you might say, well, there's these big ranches that are $20 million outside the city limits, and that's true, but those don't usually transact on the MLS.
Correct.
So those won't show up in the numbers.
So this days to sell is clearly jumping quite a bit. You're at 42 days to sell for the past month, and we take a look at the average price increases month to month being down just a bit. And this is showing us a little more of a soft demand than the in-town numbers.
Number of new listings down 15% from last month and 5% from last year.
Yeah.
So same dynamic we talked about. But what's interesting is it's not as big of a drop outside of the city limits. So maybe sellers within the city limits have a little bit more flexibility. What do you do with all that info? It's going to be a bumpy ride over the next 6 to 14 months. I'm pretty confident that come spring 2024, this market's going to be back to what we have historically seen over the last mostly 5-6 years. Interest rates will be stabilized. People will feel better about the economy. We'll be through a recession if there is one, even though recessions generally don't impact real estate negatively. If you're a buyer, there's going to be a huge opportunity here for you in the next 14 months. It might be in the next 2 months. And so depending if you're trying to sell and then buy, some people have just sat on the sidelines. First order thinking is, interest rates went up, I just got to wait. Mm-hmm. But if you think, okay, well, what's going to happen when interest rates come back down? All of these buyers who are waiting are going to rush back into the market, and we're going to be back to multiple offers. We're going to be back to having to give the seller the terms that they want. Right now, as a buyer, you can get your price, your terms. It's pretty amazing what you can get out there as a buyer, because the sellers that need to sell, they would love for you to make an offer on their home. So if you are in a position where you're thinking about buying, go ahead, schedule a call with us in the description. We'd love to chat with you about your goals and come up with a strategy and see if it is the right time for you. If you're a seller, it might be time to wait, but let's talk about that, because if you do need to buy, there's so many different factors here with like what price you could buy for, what you're going to sell your home for, what's your current interest rate. It's really hard to give up a 2.5% or 3% interest rate. I totally feel that. So maybe there's some strategies, and there's one that nobody's talking about that we've used before, which is where the buyer of your home could potentially inherit your interest rate. Now, it's a little bit of a tricky one and we got to talk you through it, but reach out and let's schedule a call if that's something that you want to explore. If you're thinking about buying and you want to sell your home and potentially use that low interest rate as a benefit to the future buyer. A lot of stuff to digest, so let us boil it down for you on a call. We really appreciate you watching. Comment below if you have any questions. If you got a lot out of this, share it with a friend. Go ahead and hit the like button so more people can find it. And we look forward to seeing you on the next video.
Thanks, everybody.